afternoon, everyone, and welcome to Stock Market Today for Wednesday, March 12th. It's Alissa Coram here, and stocks bouncing today on some better than expected inflation data. And here with me now to give us an update on where we're at in this crazy market is my colleague Ken Shreve. Ken, what do you have for us today?
Well, nice day of outperformance for the Nasdaq Composite. First day of a rally attempt for that tech index. Pickings kind of slim though when you're looking for actionable setups. Let's take a look at Berkshire Hathaway, the B shares of Berkshire Hathaway, BRKB. Also, DoorDash has kept its decline fairly tame here, DASH, and also going to stay in the gold space and take a look at AngloGold Ashanti, South African gold producer. AU is the symbol.
Sounds like a plan, Ken. We will check out those stocks, but first, let's check in on the major indexes. The Nasdaq today up 1.2%. The outperformer today, as you mentioned, Ken, while the S&P 500 up a half a percent on the day by session's close. The Russell 2000 headed into the final stretch of the session up about 0.2%. The Dow was the loser here today, down about 0.2% on the day. But we do now have day one of a rally attempt once again for the Nasdaq and the S&P.
Yeah, Nasdaq Composite led the way today, outperformed with a gain of just over 1%. You can see we had a couple of higher volume declines for the Nasdaq on Monday and Tuesday. Followed up those higher volume declines with a low volume rally here. But you know, when the index is marking the first day of a rally attempt, volume does not matter. So it was encouraging to see, tech stocks outperform today. Nvidia, Palantir, Tesla, big percentage gains in the Nasdaq 100. But sort of like the market, these three stocks need a little more time to repair after some pretty clear signs of institutional selling.
Absolutely. All right. Well, everyone who's an active investor wants to know when they could start safely or have the better odds of dipping their toe back in the water. But it's still early. We need a little bit more evidence. Once again, if you look at the past 3, 4 up days, that did not result in any further progress to the upside. So I think we want to see a little more evidence here first.
Yes, you do, because what happens after you get such a almost like a vertical downward move by the Nasdaq? You're going to get a couple of rally days. When what that is basically short covering. So maybe today is a little bit of short covering, but what you want to see is let your short covering run its course for a few days. So really, on the fourth day or later of a rally attempt, you do want to see a sign of strength. That would be a sign maybe to wade back into the market here. But again, as we've been talking about, you need good merchandise to buy from my perch. It seems like we may need a little more time for these setups to happen. But we'll take the first day of a rally attempt for the Nasdaq, and but just realize that the market is still challenged here.
That it is. Okay, let's take a look at the S&P 500 now, also attempting to rally here, but below that 200-day line. More progress needed here too.
Yeah, I mean the Nasdaq was the outperformer today. The S&P 500's gain, a decent gain. We did have the consumer price index that you mentioned earlier in the day, but it came in cooler than expected. Year over year, inflation still, or core inflation year over year still elevated, but came in lower than January. So the market liked that. Day one of a rally attempt for the S&P 500. We'll see where it takes us.
Okay. Quick thoughts on blue chips, small caps, the Dow now below its 200-day line, a couple of sessions in a row here.
Yeah, it didn't move much from the prior session after two sharp down days. Closed just with a mild decline here. Still looking for the first day of a rally attempt for the Dow, but really our attention is going to be focused on the Nasdaq and the S&P 500 when we're gauging market strength. Both of those indexes are very wide,
Yeah.
very spread out. The Russell 2000 here as well, probably the hardest hit index at this point. Uh, Paying attention to a rally attempt here, but boy, you can see a lot of price destruction in small caps lately.
Absolutely. I mean, coming down to that 2000 level now, it's a big round trip there to levels seen last August. All right, moving. Yeah,
2000 level may be a round number that could hold here. It's trying to make a stand. We'll see. We'll see how it plays out.
well, let's hope. Okay, let's also check in on the RSP, a measure of breadth here. So, while the S&P 500 rallied today, unfortunately, the S&P 500 equal weight ETF down on the day by about a 0.5%. So, not what we wanted to see there.
Yeah, this is just a kind of a similar story in the market where breadth has been, weak for, for some time now. And as you mentioned, we were on IBD Live this morning talking about nice big gains for the market. But even when the S&P was up a sizable, by a sizable percent, uh, the RSP was still lower. So on a day, the S&P closes a 0.5% higher. This closed a 0.5% lower. So just telling you underneath the surface, breadth wasn't that great. Now I did check the breadth on the Nasdaq and the NYSE after the close. It was slightly positive on both exchanges, but less than 2 to 1. So advancing stocks only had a slight advantage over decliners, but certainly this equal weighted RSP ETF just indicative of just more weak breadth overall in the market.
And here's a look at QQEW. While the NASDAQ 100 up 1.1% on the day, the NASDAQ 100 equal weight up just 0.3%. So, underscoring your point earlier, Ken, about a lot of the strength coming from the likes of Tesla, NVIDIA, and Palantir and such.
Yeah, Micron was another big gainer on the Nasdaq 100. I think, yeah. So that again, 7% gains, and Palantir and uh, Tesla, big percentage gains. But yeah, this QQEW just couldn't keep up with the Nasdaq 100. You mentioned a gain of better than 1% for the Nasdaq 100. This could barely eke out a small gain. So breadth, is something that we've been dealing with for a while. It's definitely a yellow flag for this market. So early in the stages of a rally attempt here, we'd like to see QQEW and RSP start to firm up here with the broad market, because you need better, improving breadth for a market rally to sustain itself, and we're just not really seeing it yet.
Yeah. All right. Well, when you think of flight to safety and the kind of market that we've been seeing, a lot of investors think about gold. So let's check in on gold here, continuing its move. Look at that relative strength line, up 0.4% on the day. A little bit of a pullback the other week, but now getting close to highs from a couple weeks prior.
Yeah, gold has definitely emerged as a flight to safety trade here in a market that's under some distribution. Beautiful breakout for GLD when it crossed that 257.71 high, ran up to 272, and then just a fairly orderly decline down to the 21-day line. Lost support there for a little bit, but it's holding up near highs. So if you don't have a gold exposure in the portfolio at this point, probably makes sense a little bit. Makes sense to have some either with GLD. We're going to talk about another gold stock when we get into the stocks to watch segment, but GLD and gold in general still acting well in this market.
hmm All right. Well, let's take a look at BRKB, the Berkshire Hathaway B shares here. Some really tight closes as of late, Ken.
What I see here is 5 days in a row, actually 6 days in a row, where the stock closed off lows every single day. Some days it was up, other days it was down, but really showing a lot of strength here as it retests the buy point of a prior breakout here. So not a name that we often talk about on stock market today, but retesting that 491.67 pivot. You can see a beautiful breakout over the 500 level. Been a very orderly decline here. So to me, this stock, even though it's been pulled down by weakness in the broad market, it's holding at the 21-day line and really showing some tight closes here. So a stock showing strength and support, still in a buy zone here with a relative strength line that you highlighted up
Mhm.
up near highs. So gold and insurance are still seem to be the biggest areas of leadership in the market. Of course, Berkshire Hathaway's got a big slice of business in insurance, so I
Mhm.
think it's looking pretty strong here.
Yeah. And not only are we recently seeing the RS line cross highs from last August, September, but also if you look at that even shorter term RS, as the market is pulled back, this stock tightening up. So, no surprise, even though the stock is off of its price highs, that RS line is peaking. So, that subtle strength there that we love to see when the market's looking rough and ragged out there.
Yeah, that's why we like to use the relative strength line. It can really highlight a stock showing strength, even if it pulls back mildly, like Berkshire Hathaway has done, showing a lot of strength and support here, still in a buy zone and a really good looking relative strength line.
All right, well, let's now check out DoorDash, ticker here DASH, up 2.2% on the day. Volume coming into the stock, retaking a key level here, Ken. Of course, pulled back with the broad market like a lot of growth stocks, but a very orderly pullback, one might argue, compared with a lot of other stocks out there.
Yeah, I mean, I think DoorDash was a longtime member of the leaderboard model portfolio. We recently, took gains in the stock when it flashed a sell signal and went through its 50-day moving average. But this, for a top-rated growth stock, looks a lot better than most growth stocks that I'm seeing in my screens now. First of all, yeah, it was a violation of support at the 50-day moving average, but you're not seeing too many growth stocks at this point rallying back above their 50-day lines even after today's strength. There might be a handful of them. DoorDash is in the process of retaking that 50-day line, but really did not pull back that far off its highs. When you look at the weekly chart here, this is a stock that we could definitely see going back on leaderboard and being a member of the portfolio. Still seems like it could be in the early stages of a move here. We'll see how the base shapes up. It's almost we're going to be 1, 2, 3, 4 weeks into a possible new base. So we'll see if DoorDash can kind of round out the right side here, and maybe it will be able to break out again. It's going to need a healthy market to do that. It's probably going to need a confirmation from the major stock indexes. We're still very early, but this has been an orderly pullback so far for DoorDash, and a stock that I think could very easily resume its leadership, and that's not something that other former leading stocks can say at this point.
Totally agree. Okay, well, let's round things out with a look at ticker AU, a gold miner. So this one shining bright right now, would you say, Ken?
Yeah, I'd say so. Between the insurers and the gold producers, you've got some silver stocks acting well, but AU. Uh, Believe they're not. They're based in South Africa. It says their headquarters is in the UK, but it's a South African gold miner. Nice breakout here. You can see how pattern recognition is sort of highlighting the buy area with that dotted line. 31.46. It's just retesting that buy point, and it's holding support at the 10-week moving average. So this is a pretty good setup to keep an eye on. as gold stocks continue to attract interest in this market. Still, we're just retesting a prior buy area, and again, you look at the two most recent down weeks for Anglo Gold. It closed. It was lower. It closed lower, but up near its high that day, and then the second down week it closed near its low, held support at the 10-week moving average, and then last week rallied in higher volume. So technically, I think this one still looks
Mhm.
pretty good. Composite rating of 99, the highest possible. Lots of ratings here look pretty good for Anglo Gold Ashanti. So some stocks extended in the gold space, but I think AU is still sitting in a good spot here.
All right. Well, thanks for putting it on our radar, Ken. Before we wrap, Adobe earnings tonight, was that tonight?
Adobe, it was coming out with earnings. Yep, and boy, it's been a laggard in the tech sector, and you can see a pretty
Mhm.
bad gap down 3 months ago when they reported earnings. I don't know if they looks like the CEO is on CEO right now being interviewed, but we'll see. Stocks looks moderately lower in the aftermarket, but on a pretty harsh downtrend after a negative response to earnings, like I said 3 months ago.
Yeah. All right. Well, thank you so much, Ken. We always appreciate it. Good chatting with you.
Okay, see you tomorrow.
Yeah. See you tomorrow. And thanks to everyone for tuning in. That is it from us for today. But it's Wednesday, so we do have our weekly Investing with IBD podcast with host Justin Nielsen. And special guest this week is our very own David Saito Chung. Get ready for a lot of fun. I think there's some sort of pop quiz involved from what I'm aware, and a lot of great nuggets for investors to give them some guidance during this tough market period, what to look for as stocks are trying to make a rally attempt here. So check out our weekly Investing with IBD podcast live at 5 p.m. Eastern today on our YouTube channel. You can also check out the replay on YouTube at investors.com/videos. And you can listen to our weekly podcast on Spotify, Apple Podcasts, or wherever you like to listen to your audio content. So make sure you check that out. And then we'll see you tomorrow morning on IBD Live, starting 10 minutes before the opening bell, investors.com/IBD Live for all the details on that. We'll see you there. And then we'll also see you right back here tomorrow after the close.